Hey Joe, how you doing?
Mate, I'm doing all right. A little bit sweaty,
Yes.
given the rise in temperature.
I know,
What about you?
buddy. Yeah, very hot over here. Literally a sauna in this studio space, dude. In the studio, and it's like, this week has been super hot and it's been super fast. Right? It's just this. I don't know where this.
Yeah.
Bro, I feel like I say it every week. Like, where has it gone? Man,
I don't know. It was crazy. Literally, it was so funny. Like when we were talking just before we started recording this podcast, we were talking about things at the start of the week, and I was like, "Wait a minute, didn't that happen last week?"
I know.
And it's like
insane.
it's like literally, it feels like 10 days have passed and only 3 days have passed.
I know.
Mad.
I know. But look, dude, as we've been, we continue to see, it's just, there's never a dull week, but things are choppy because, 1 minute this week we've got risk appetite, next minute, obviously on Friday now, we start turning on our head and the change in tone and the change in theme. So choppy markets continue, as we've seen the last, 7, 8, maybe even 9 weeks. It's been crazy. But look, let's just go to the start of the week. I remember obviously on Sunday at the Open, Monday, it's very much, about risk appetite. And I think obviously one of the things that I had noted down here was quite key was, that Franco-German deal, showing that unity with that potential rescue fund. Obviously you're aware. Do you want to sort of give a bit more details on that, your views?
Yeah. So basically, as part of the next EU budget, they are trying to put together this big fiscal package that's supposed to facilitate the post-coronavirus economic recovery. And there's been quite a lot of bickering about this because, some people want it this way, other people want it this way, and that has been weighing on Euro. But the French and Germans came together and managed to agree on something. Basically, it's going to be, their proposal is to have this fund of 500 billion euros. Going to be mostly in the form of grants as well, so just free money handed out to the countries who need it. And the key thing, the thing that markets really loved, was the fact that they want to in part fund this by raising joint EU debt. And that is seen as like a big show of solidarity and a big step towards like EU fiscal union, which a lot of people think the EU need to do, or the EU's eventually going to die, or the Eurozone anyway. So yeah, Euro absolutely loved it.
Loved it. Yeah, it's true. Big show of unity there. And, as we were saying before, it's like, bear in mind, I think there's a lot of there's still a lot of political tension within the EU, which is not good for the Euro, right? We've got that division between North and South, and, just over, it was, I think, 2 weeks ago now, we had that German court ruling on the ECB stimulus. So it's almost like Germany versus the rest of the EU. So I think this is obviously not a mass. Well, it's a big win. It's a big win for Euro solidarity, as you say, but it just eases the tensions a little bit between Germany and the rest of the EU, I think, by them doing this. So
definitely, because the fact that because in the past the Germans have been quite against this idea of joint EU debt, so the fact that they're now on board is like a big step. But we just need to get those other countries that don't like the idea, like Netherlands, Austria, and then Denmark and Sweden. Like they're still against it. So yeah, we'll see if they can be brought on board.
It's true. And another thing that helped at the start of the week as well was that Moderna. The Moderna vaccine that had promising early stages of treating COVID-19, right? They're a US company?
Yeah, I believe so, yeah.
Yeah. So what was the crack there at the start of the week? Because that really helped as well. Stocks were rallying like quite aggressively.
Yeah, just risk appetite. Absolutely loved it. I mean, I can't remember like all the details. I mean, obviously, I'm not none of us are medical experts, but it was something like they did this phase 1 trial, so it's like an early trial, and they were dosing these people up on this vaccine. And basically, the crux of it is the people that were getting this vaccine were getting the same amount of antibodies that kill coronavirus as the people who have already had coronavirus and recovered. So yeah, that is a big sign that hopefully this vaccine is going to turn out to be the real deal down the line. But obviously it's early stages of the trial still, so we're not really sure yet.
I mean, dude, like the markets just get Like, they get so excited, like so heavily stimulated on these early signs, like that are never yet to be conclusive. You know, they're not yet to be proven to be conclusive.
Yeah.
They just love it because I think that day, I'm just checking here. I remember on that day. Let's just have a look here. US 30. I just want to quickly get up. It's Monday. I just wanted to see, just because the rally, I remember it's been like, all right, chill out. It's not even conclusive yet, you madmen.
yeah. It was like about 4% higher in the S&P 500.
Yeah, Dow 4.5%. It's like, whoa, easy.
Oh my god,
easy. Man, they love it.
I know.
Any excuse.
I know.
Yeah, and but anyway, it's what it is. So that helped obviously risk appetite. Let's go on to, before we talk about the change in tone that we've seen obviously today, Friday, let's go on to another interesting talking point right now, as the fundamentals continue to stack up against GBP, and that's the talk of, negative rates. Negative rates. It seems like some of the members are open to that.
Yeah, definitely. I mean, this is something we've been tracking for the members quite heavily, but basically it must only have been about in the last week, loads of Bank of England voting members, including the governor himself, have basically said that the bank is open to the idea of negative rates.
Yeah.
They haven't said, that's pretty much all they've said, but even the fact that they're like open to the idea is a hint that they could go down that road in the future. So yeah, that definitely has been weighing on GBP. I
know. I don't know how I feel about negative rates, to be honest. It's, I need to really, I think one thing I need to do is look into really how that affects everyone in terms of as a consumer. Because obviously if you're a saver, it's not good if you're a saver, because you're going to be charged for keeping your money with banks. Do you know what I mean? Your savings going to be getting eaten away massively.
Yeah, exactly. And it kills banks as well. Like, all you have to do is look at bank stocks in the European Union. Bank stocks there are just dead.
I know. So I don't know if that, it's not the best. I don't know. We'll have to see. Hopefully they know what they're doing.
We'll have to see.
But I don't know. I'm not a massive fan of the idea, to be fair. So let's just see what happens. But anyway, that's look, at the end of the day, it's another laggard against the pound. We've got the Brexit stalemate still. I know we continue to speak about it, but dude, I don't think, what bothers me massively is that the markets have not, and because sometimes I put it out on Twitter, and then some douche messages back. It's like, oh, this is priced in. Mate, shut up. It's not priced in.
Agreed.
It's not priced in. If we leave without a deal.
It's not.
My goodness.
Yeah, I'll tell you something interesting. I've actually got a friend who, I'm not going to name any names, obviously, but they work in the government, and they're sometimes working on this whole Brexit thing. Yeah. And they weren't giving me any inside information because they're scared about doing that. But this person was just telling me that their personal opinion. And they think that, because, a lot of the market expects the UK to ask for an extension. Yeah. Well, this person was saying that these leaders of the country at the moment, they're Brexiteers, they're proper Tory Brexiteers. Yeah. They're not going to ask for an extension. True. So I think when it comes to the end of June, that might be a bit of a shock for the market, because obviously we have to ask for this extension by then.
I like that, Joel. I know it's a very good point. It's a very, very good point. I like that bit of insider sort of tone there.
Yeah, exactly.
Mate, I bet you know a lot more there. You just didn't want to get that other person in trouble. Just really, I could tell you're really withholding some information back. No, that sounds interesting, literally,
man. I've already got my position on. Yeah, no, I'm joking.
Yeah, no, but it's definitely a good point. I agree there. So anyway, that's a potential problem there for GBP to come. What else have we had? I guess we might as well just talk about this thing on Friday, really. And I think we started picking up for the members anyway on Thursday. We anticipating that we started to see that change in tone of dollar strength coming into play, looking stage rebound, and obviously overnight things really picking it up into play and into today. It's totally risk off now, right?
Absolutely, yeah. It's the focus has gone back. People have been flagging this all week, to be fair, including us, loads of other analysts as well, flagging the risk of, like, we've got these US-China tensions that are bubbling under the surface, and now the focus is on Hong Kong, because basically China's going to basically tighten the grip of control over Hong Kong through some new security laws. And the US, who has quite a good relationship with Hong Kong and wants to support them as like a free, democratic, part of China, they're not happy about that at all. So it's just another point of tension between the US and China. And yeah, you're seeing the market react to that today.
Man, it's like, you know what it is? It's, man, these two are just like school kids, basically. It's just like constant bickering. Man, they're just finding anything and everything new. Like, there's something new every day. You know, we had that the Senate passing a bill for those heavy regulation, those Chinese companies or foreign companies in general.
Yeah.
You know, it's just like one thing after another, like nitpicking.
Yeah.
Oh, God.
So many. Yeah, honestly, you're right. It's a really good point. It's quite important to emphasise, I think. There's so many little points of argument between the two countries, like Hong Kong, like the trade deal. Are China buying enough?
Yeah.
All this stuff, like you were saying, like taking action against Chinese companies, the whole Huawei thing.
Yeah, I know.
Then there's also like there's geopolitics as well in the South China Sea. Like China's like building military bases there, and the US don't like that. So there's so many arguments.
Man, no, you're right, dude. It's very good points there. I know. It's this. I mean, it's only going to get worse, really, isn't it? Before it gets better.
Yeah, mate, it's got
a lot worse.
Yeah, exactly.
Oh, God. So, anyway, that's that. I assume that'll probably be carried into next week without a shadow of doubt. Anything we're looking out for major next week?
Just going through the calendar at the moment. Also, obviously, Monday, bank holiday for, UK, Europe, and the US. Yep. So, nothing going on then. Tuesday's going to be quiet. Just some US consumer confidence data. Not really anything on Wednesday. On Thursday, we've got a bit of New Zealand data, business confidence. That'll be interesting for Kiwi traders. A bit of Aussie data as well, capital expenditure, durable goods in the US, and jobless claims data as usual. Mm-hmm. And then what we got? Eurozone CPI on Friday.
Okay.
And Canadian GDP. So, to be honest, quite quiet week.
Yeah, nothing overly sexy in that what you just said. So I mean, it's just paying attention to the themes anyway, which are more dominating. So yeah, dude. Well, look, another good week, man. Another good week, and mate, have a good weekend, and let's stay lit, baby. Let's
you as well, mate. You as well.